Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending January 23rd, 2026. So the theme of the week is geopolitical fragmentation. Of course, all eyes on Davos this week. I don't know that we've learned much this week. At least there's a few important risks that seem to be off of the table, but new risks are emerging. So we try to make some sense of all of this. But before we do, let's start with a look at this week's markets at the close on Thursday. So negative week for bonds, so rates a little bit higher. For equities, it was negative across the board, but of course we had a tough start to the year, to the week rather, followed by a rebound. The TSX in particular was let's say outperforming on the downside with only a minus 0.11% lower. Of course, is explained by performance in commodities. We'll get back to commodities in a few minutes. But year to date, the picture is still the same. Emerging markets first, Canada, then Europe, and then the US after. So the themes of 2025 rather, the drivers of performance, the relative performance of markets, these continues in 2026. Gold up 7.4% on the week. It's not a typo, close to $5,000. What would have been a year-end target for us and maybe for many other outlets is pretty much in reach here, 14% year to date. So we'll see where we end up. We still view gold positively for the long term, but in the short run with these kind of moves, of course, it's hard to make a call. The Canadian dollar higher on the week. This was mostly the USD that was lower. That tells you something when you have a risk-off sentiment and you don't have the safe haven flows towards the USD. You get the reverse, and then after that, after you have some resolution, the USD continues to go a bit lower. That tells you something about the opinion of the markets on the USD. So let's see, we're starting to read, I think it's interesting to read quiet quitting on US assets. So global investors may be investing less in the US, rotating out of the US, not massively, maybe starting to happen. So this will be a trend to follow. Now, the topics of the week on Davos, of course, Mark Carney, the PM of Canada, was on stage, made an historic speech. At least it was very well received. The old order is not coming back. So talking about how the middle powers need to play their role. Very important speech, of course, important consequences on the relationship with the US, at least potentially. We're already starting to hear from the US, for example, Art Luknick here, the Secretary of Commerce, saying that Davos, the Carney's Davos speech was political noise, that it might jeopardize USMCA, of course, par for the course for the US. Trump, of course, Trump on stage calling off any risk that they will use force to acquire Greenland. So that was a big breath of fresh air when the speech was made on Wednesday. Trump calling off the tariffs after his speech on the tariffs on Europe that were threatened on 8 European countries after reaching what he calls a framework on a Greenland deal with NATO, but the details of that deal are still pretty elusive. So that opens a new box. So what does that mean? What will happen? We still don't know. And of course, on Thursday night, we heard that Trump is disinviting Canada from the Board of Peace in open letter to Carney. So that settles that. So very important week that does open some new risks, that closes a few, maybe I don't know if it closes, but it lowers the odds of some. So we'll see what happens. I don't know if we learned much or if we got much more closure, but this is the state of things. Where we did have some more closure, and something that's very important to the market, is on the Fed independence topic. So this week on Wednesday again, the Supreme Court was hearing Fed Governor Lisa Cook's case, and they came out as sharply critical of Trump. So that's very interesting because the Supreme Court has been pretty, let's say, friendly to Trump over the last year or so on, the reach of his power to fire, to nominate people in institutions that he wants to. And the Fed has always been a bit protected, but, this week things seems to have gone in a different direction. So as you have on the left, a few highlights from Reuters here. Court is likely to block the firing. At least this is what the reporting that we're getting is. Justices are lean toward protecting Cook's position. Due process concerns. There's a lack of a hearing. The lack of hearing drew some strong criticism. So just to bring Lisa Cook to court like this without hearing her side of things was criticized. Judges Kavanaugh and Roberts, who are considered conservatives, did not really sound friendly to Trump's case, highlighting insufficient process and Fed independence risks. Maybe, said Roberts, said he viewed the mortgage issue as a possible simple mistake, not something that is for cause to fire someone. And the justices feared economic and institutional fallout. So that's interesting. Now, the next likely steps, according to the experts, would be the Supreme Court to send the case to lower courts, ask them to define what for cause means. And then once this is done, send it back to the Supreme Court so that they can opine on that. So how long will it take? Will it take months, years? I mean, it's still up in the air, but for now, that does, pretty much cement the independence of the Fed for now. So of course we have still a case, the DOJ going after the Fed and Mr. Powell. We're not hearing much about this these days, but there's a few risks that are getting settled around the Fed. So what's priced in for the Fed right now, as you can see on the right, still about 2 cuts by the end of the year, 1 cut by the middle of this year. So it's 2. So one mid-year, 1 at the end of the year. But what's still interesting, might look little, but it's still important. The beginning of the year, it was 2.5 cuts that were priced in. Now it's 1.8. It might seem little, but still, that's the market starting to drift away from the high conviction it had on the Fed cutting. So quite interesting development. Let's see how things evolve. Now, if there's one asset class that is doing well right now, it's commodities and gold. Of course, I've talked about it earlier. So base case scenario that we have global reacceleration of the economy, higher defense spending, all of this is good for base metals. This is good for commodities overall, and central banks still shying away from adding U.S. assets to their base, or let's say rotating away from U.S. assets and from maybe fiat money towards gold is also a theme that continues to drive markets. So you have good things happening in precious metals, you have good things happening in base metals, and of course that helps commodities, that helps the TSX. We've seen that earlier. Things are moving so fast right now, they can always be ripe for a pullback. We don't know exactly what will happen in the short run, but base case and also the risk scenario that we have, that there's more geopolitical fragmentation, more spending on defense, that still points towards good things for commodities here. So very busy week done. Another interesting week ahead. Bank of Canada rate decision next week. We'll have GDP growth for November. We have a Fed rate decision also on Wednesday. Both are expected to stay on the sidelines. Bank of Canada market is starting to deprice slowly the one hike it expected by the end of the year. We agree with that. I think it's more 2027 story. So staying put till next week. Fed staying put next week. Quebec market is pricing that. And we'll also have a very interesting reading on consumer confidence from the conference board. So it's always a pleasure to serve you. If you appreciate the content here, please share. And of course, come back again next week.